let's get in Jyotivardhan Jaipuria. He's the founder and MD of Valentis Advisors. Jyoti, good morning. Thanks for taking the time out. Your view on the large caps. Let's talk about the large caps at the moment. How are you seeing in terms of valuations? Are they somewhere in the middle, slightly overvalued? Or what's the way forward, keeping growth in mind?
Yeah, so I would say they are slightly overvalued maybe. So if you just look at pure numbers, a 10-year average of P has been 18, and they are now trading at somewhere close to 19 and a half times. So slightly overvalued. So it's not necessary market has to always trade at averages or something, right? So to that extent, it's like maybe next year we get some sort of time correction which will adjust this valuation. I think the key element remains growth, that whether the growth will come back. Our views growth will slow from what we've seen over the last 2-3 years. And to that extent, investors need to temper the return expectation. At the same time, we think growth will come for the large caps. We'll have earnings growth of around 10 to 11%. So probably, that provides the base for getting some sort of return. Just remember, we had 9 consecutive years now, if we include this year, of positive returns in the Nifty. So by law of averages, somewhere you are headed for 1 week here. But we are hoping next year we'll manage a small positive return on the market.
Mr. Jaipuria, very good morning to you. Tamanna here, and great to speak with you at a time when I think we are closing in 2024 in a bit of flux. No one's quite sure what's going to happen next. What should be the strategy now from your perspective as a seasoned investor who's seen so many ups and downs? What should be the kind of plan that average investors make, some of them new in the market, for the next 6 months?
So, Tamanna, I would say one is, keep your return expectation tempered. But what's happened is over the last few years, we've had returns which are abnormal. So don't expect a repeat of that sort of return. Just remember that returns somewhere do tend to average. Second is you to start thinking a bit longer term, because it's possible next year is not a great year because the markets are just to extraordinary returns we got this year. Third is there could be a lot more volatility than what we've seen in the last few years. Because last few years have been a dream, right? Every small dip you bought in the market, you made money because the market went up after that. Fourth is, next year we'll see more macro factors come into play. It's like, one is obviously Trump starts his presidency on 20th of Jan. And there's a lot of uncertainty on what he does, because there'll be a lot of talk on what he's done, but nobody's sure what he finally does, because most politicians say something before they come to power, and when they come to power, they do something else. But otherwise, there are a lot of contradictory things he said, right? He wants to cut taxes in the US at the same time, keep fiscal deficit under control. He wants to, put tariffs there, but if he does that, then inflation will go up. So those are things which will play out. There'll be a lot of macro factors which play out. And so that is something they have to keep an eye on, because that's not really been one of the concerns for the last many years for the investors.
Jyoti, you've been a keen observer in the healthcare space over the past many years. We've seen some resurgence in the pharmaceutical subsegment specifically. Of course, there's opportunity in the CDMO, CMO market. We also have the US Biosecure Act, where there is a lot of uncertainty around that. How are you assessing this sector, and what kind of areas are you looking at, or rather being interested in?
So we like the pharma space in general. And, one of the sectors we like is what you were speaking about, the CDMO, CRAM, that whole space. We think it's good because, we'll see some move away from China into India anyway. And India is establishing itself as a player. So I think, that is a segment which will grow and which will continue to grow. So a lot of companies here will become much bigger over the next 5 years, 10 years than what they are today. And so it's a sector we like. If the Biosecure Act comes in, and ours was irrespective of the Biosecure Act, we like the segment. If the Biosecure Act comes in, it will be an additional boost, because a lot of people will be forced to then come to India who probably may not be looking at India as seriously. But the way we operate is always we can never time and forecast what government will do. So do we like the space irrespective of government policies? And then if the policy comes in our favor, then it's even better for us. So, that's one segment we like here. The other segment we like is actually the US generic space. So, the US generic space had done badly for the last many years, and it started to turn around a bit from last year. And the main reason is that the price falls now are very minor. So to that extent, companies are able to actually more or less maintain their margins or even grow a bit with, volume coming through. So that is another space which we like. There's been a lot of erosion in value for companies supplying to the US generic market. And to that extent, we think this is a 2-3 year phase at least where these companies will do well. So those are the two spaces we like. We have not really been that bullish on the domestic pharma. We had some exposure earlier when we thought valuations have moved up quite a bit. So we've actually reduced our domestic pharma. But then these are the two segments where we moved all our exposure.
Mr. Jaipuria, I mean, that's the view on pharma. I'm just wondering how you're feeling about banking. I think has been one of the relatively less loved stories through the year. Seeing a resurgence today, but I'm not talking about it from a today point of view. Going into 2025, is it a back to basics kind of a view on banking? You go to the big storied players, whether private or public.
It's very interesting because the way we work, we don't really do momentum. Our whole philosophy is what we call the 3 U's. We do undervalued stocks which have underperformed and which are underowned. So banking is coming up on our screens quite a bit, and we started nibbling into banking for the last few weeks. One of the reasons is coming up is when we do valuation, we tend to look at longer term horizon. So if you do a 10-year average valuation across sectors, banking is one of the two sectors which are cheaper today than they are on a 10-year basis. So both if you take a price to book or you take a P, banking today is cheaper than a 10-year average, and it's probably the only sector which is cheaper apart from media. So there are only two sectors cheaper on a 10. So to that extent, valuations are very cheap. The stocks have underperformed quite a bit. So to that extent, it's something which we started to nibble. We think, the banking space will do well next year. There are short-term challenges which we all know, there's some pressure on NIMs. There is, default or there's NPL risk in the MFI space. But, the stocks are pricing that to some extent. We think that the credit growth will be strong, earnings growth will be decent. So we like the large banks, but we also like some smaller banks which are trading at very low valuations. So, here valuations are like sub-priced to book of 1 time, closer to 0.8 time, 0.7 time. And from here, money can be made if, there's a recovery in this banks, they're trying to clean up their books, and you get a re-rating coming just because you bought them very cheap. So for us, we are playing like both of them, some large cap, well-known banks and some, smaller banks, which are currently at pain, but we are trading at very attractive valuations.
I have a follow-up on to that one. You tend to veer towards unloved stocks as well. Well, does that mean that you are looking at some PSUs too in the banking space?
Yeah, so, we are doing both PSUs and private sector. And for us, our mantra is simple. Where are valuations? Where do we think, valuations could be 2-3 years later? And so it's a mix of PSUs and private sector. There are a lot of, banks which get hit when, there are 1 or 2 quarters of NPLs coming through. Then they get hit very substantially in terms of the valuation. And if we see a reversion coming to mean in terms of, a lot of NPL provisioning is behind us, then we tend to, go and buy these banks because at some point they again trade back to their original valuations.
I'm wondering, and there's so many things I want to ask you, but because we have less time, I'm going to start by asking you how you're looking at the primary markets right now. And are you tempted to nibble into anything which is on offer? And I'm not just talking about the 5 listings today, but even in the recent past, there's a whole slew, many more lined up as well.
Yeah, so Tamanna, for us as a fund, it's like very difficult to participate in the primary market because, the issues are oversubscribed so much that, we don't really get any allocation. So it doesn't become worth our time. But, just in terms of valuation, what we find is a lot of the new IPOs are coming at valuations which are much more expensive than what the existing stocks are trading. And then they tend to trade at higher valuations for quite some time. But at some point, there will be like a reversion where, you have to look at the listed space and the new IPO in the same lens. And quite often the existing listed companies tend to be much, much cheaper than what the new IPOs are coming at. So this is like a very broad brush I'm giving you. I'm sure there are particular companies which we like, which have got listed recently. But in general, we find that the IPO market is coming at high valuations, and because they're getting oversubscribed, the listings are happening at valuations which seem very, very high.
Yeah, that's an important point for our viewers also to remember, that look at the valuations, not just listing gains. You know, that could be optically confusing or misleading. As we leave you, Mr. Jaipuria, your one or two big ideas for our viewers going into 2025. Which sectors, which kind of companies do you think we need to look at?
Yeah, so our thing will be buy stuff which has not gone up. Don't buy the momentum plays of 2024, because typically if you do analysis, what does well in 1 year rarely does well in the year after that. So that's why we've discussed two of the sectors which are probably our favorite sectors into 25. One is the BFSI space, especially looking at banks which are cheaper and which have underperformed a lot. And the second is the pharmaceutical space.
Thank you so much for that, Mr. Jaipuria. And with that, season's greetings to
Thanks a lot.
everyone
Season
on your end, from all of us
2024.
here at NDTV Profit.